Hey traders, welcome to the Forex market analysis session. If you guys are new, my name is Alexander Nikitin. I am a professional trader and a developer of MPS software. Well, in today's video I want to do the analysis of my whole portfolio. I will be checking 1 hour and 4 hour time frames, so it might take for a while for me to explain you the setups that I'm looking at. I will try to explain the identification, the execution and the management part of this decision-making process. And as I told you, it may take for a while, so sit back, relax, maybe grab your coffee and enjoy the video. Well, let us start. The first pair is euro-dollar 1 hour. The time frame says nothing. Let's go to 4 hour. It is absolutely the same. Nothing is here. Well, then let's switch to something else. If there is nothing, you need not to force the patterns, especially when there are none. Let's go to pound dollar. It is the third pair. What we see this perfect cypher formation. I'm not going to trade it aggressively the way it is conventionally trade, the way it is advertised to be traded by the creators of this pattern. I'm not going to do that. Instead, I will be trading it conservatively. If you guys absolutely newbie and you don't know how to identify these patterns, you should first start from swing identification technique. You see this dot line, it shows me the swings that I'm looking at. And then you should compare this swing, how they are related to one each other with special Fibonacci ratios. And you can have an absolutely free trading course if you go to my website www.ps-software.net. Click this Learn the Patterns tab, choose the pattern that you are interested in, as we are talking about the cipher formation. So this page of the cipher formation is an illustration to this trading course. So you have a criteria 1, criteria 2, criteria 3, how to exactly identify this pattern. Then you have the conventional trade execution rules. They are conventional, I repeat, they are not something that I use because I'm not that aggressive as the creators of this pattern. And you will have the trade management rules. Trade management rules are pretty the same in my approach and the founders of this pattern. Okay, so what I'm going to do here is this. I will treat the zone between the 786 and 113 Fibonacci extension as my reversal zone, and I will be looking for a powerful candlestick formation. If you guys don't know what is the powerful candlestick formation, let me draw a diagram for you. For example, we have this candles and they are moving to the downside, 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 downside. So this movement is to the downside. So somewhere within this zone I expect price to move higher. How do I understand that price moves higher? I will be looking at a powerful bullish close. So this is a close that takes place in the top 20% of a candle range. So if you consider this high to low range of a candle being 100%, then top 20 is something that is above 80 to 100, and bottom 20 is something between 0 and 20. Yes, so a powerful bullish close is somewhere here, and it doesn't matter where is the open. So if it is the open, you will have a kind of key reversal bar that is known in price action, or engulfing bar, or maybe it will be a piercing bar if you are a fan of candlestick formations. It simply depends on previous bar combinations, but and the open of the candle. But for me, it's not important. What is important is that the close in this top 20%. So if the open was also somewhere nearby, then it will be a pin bar or a hammer or whatever. So after this candle closes, you can enter, at least I enter at the close of this candle, to the upside. I'm not looking for a confirmation to break this high of the candle, because the pattern is a by itself is giving me the edge. It is something that gives me a 60% probability that price will move from here to here to hit that trade 2 level. This is simply an entry technique. I'm not using limit orders. I wait for this confirmation, and it is called a domino factor. By itself, if you imagine that dominoes standing them on the edge, the dominoes standing on the edge, something like this. Yes, if you take one separate domino and you push it down, push it sideways maybe, it will fall. Yes, and nothing happens. One domino fell, and it is only one domino that is laying on the ground. Yes, but if you have a series of dominoes here, yes, and you push that one domino here, when it is falling, it is touching this domino, then this domino touching this, and they all fall. So if you are looking at this price action candles and you base your decisions only on price action, so well, a powerful bullish close leads to this thing. It may affect only one or two next candles. Yes, after that you can have some reaction to the upside. That's it about the powerful bullish close. It's not something that is used on its own. It is like a single domino. It is falling, well, it affects the next candle. Okay, so the next candle is falling as well. But if you have a series of dominoes, so this cipher pattern represents the series of dominoes, and when you use that powerful bullish close, it is a domino effect. It causes the domino effect, then they all start falling or they all start rising like in that domino. Well, hope I explained that good for you. So this is looking for a domino effect within this zone. Let's go back 1 hour euro yen, cipher pattern, but it's very far from completion. You may set an alert at 126.83 something to have notification, but for me it is way too far away. Okay, dollar, Aussie dollar. Oh, nothing here. This is what I'm talking about. You can see this. After this being completed, after this zone was hit, so what I was looking at was a powerful bullish close, and unfortunately I didn't have a powerful bullish close on 1 hour time frame, on 4 hour time frame. And what I do in this case is I switch to a lower time frame, especially when this number is 351 is less than this number, 891. So I switch to 1 hour time frame. Come on, you see 357, 351. When, well, it is okay. And then I look for reversal candles on this time frame. My other technique is not to switch to any other time frames. I simply calculate the number of bars between the completion and invalidation, and right now I have 41, so it tells me that the pattern is very small for this time frame. I should have at least 50, so I switch to 1 hour to have at least 50, and it results the same. So if I switch to 50, to 1 hour, I will have 165, and now the pattern is very big for this time frame. So you need to look at something between 1 hour and 4 hour. 2 hour will be very good for you, somewhere in this 50 to 100 candles would be enough for that. Let's try to analyze that using 2-hour time frame? Well, how can I analyze that 2-hour time frame? Potentially I can do it this way. Okay, period multiplier is 2. Yes, if I multiply this time frame by 2, I will have a 2-hour time frame. If I go to offline, Aussie dollar 2-hour, hey, come on, Aussie dollar 2-hour, AUD USD, I think it is here, this one. Okay, and then I need to apply a default template. Okay, so we have this pattern. Now it is also drawn on 2-hour time frame, exactly the same way it was drawn on 4-hour time frame. This is, let me disable period separators. Okay, so right now it looks much better, and it is not as small for this 4-hour time frame, and it's not as large for 1-hour time frame. Okay, disable this as well. Now the candles are very, very good. So what I was looking at is this candle, this one, the candle that is called a reversal candle. The features of that reversal candle are as following. The low of this candle should be lower than this low, and the close of this candle should be higher than this close. So this is the number 1 entry technique, and this is number 2 entry technique. It is this one, inside bar of that. When it is violated to the upside, it is also a very good confirmation of price to reverse. So potentially using 1 hour will give you very early signal, so you will enter somewhere here. Using 2-hour time frame, you see, Aussie dollar 2-hour. Using 2-hour time frame, you will be giving a slightly more conservative entry. Okay, either way, when you wait for a confirmation, you have your risk slightly less, because price is going deeper, closer to this invalidation level. This is number 1. And number 2, you increase the probability of a win, because you're not anticipating a reversal. You are you join the movement when the reversal already started. Well, I hope I explained that to you. Okay. Oh, I know it. Now I need to disable this period converter. Well, that was the pattern. Right now we have nothing. Let's move on. What is there? Pound yen, 4-hour, nothing. Dollar Canadian, 4-hour, 1 hour, nothing. New Zealand dollar, what is there on 4-hour? It was a wonderful pair for trading on 4-hour. Recently we had this winner, a unified Gartley. We had this winner, a cypher pattern last week. Okay, pound Aussie, 4-hour, 1 hour, nothing and nothing. Euro GBP, nothing here, nothing here. Euro Aussie, although this pattern was invalidated, but those of you who don't pay attention to the C2D leg being one swing, I know that the guys of the creators of this cypher pattern, they don't pay attention to this phenomenon of C2D leg to be one swing. Well, you could capitalize on that. I missed that because my personal rules doesn't meet this criteria. Don't meet this criteria. I don't have one rule, I have several of them. It is one of them. Okay, what is that? Consolidation here, nothing, no pattern. Euro Canadian, same stuff here. So the C2D leg is broken. I call it broken because inside of that the indicator shows that it was moving to the downside. It should only move straight. It should be one movement, and since then it is moving sideways. Well, I told you about this yesterday, that it is looking like a double top broken to the downside, and then we have a retracement to the upside. But the break to the downside, well, it then didn't happen, and this is not actually a double top because we have a close above that. So be very, very careful with this pattern. I don't see any reversals here. For me, it will continue this way. I just have a feeling of that. Nothing else. Pound Canadian, okay, nothing is here. New Zealand yen, a cypher pattern. Okay, simply calculate the number of bars. If you have 50, that's okay, then you can execute it here. There is a more sophisticated way of choosing the best execution time frame. You can use these numbers. If it is greater than this number, then it is okay. This number represents 380 IP rate 5000, so you can calculate it as well. So guys, look at this. This one is a reversal zone, and what I want you to pay attention is the price action within this reversal zone. First of all, this is a very powerful bullish candle. It is a bullish candle, and as we enter this reversal zone, this bullish candle appears. It is not very wide, it's not as anything, it is called a tail close. So it is closing at the top. Powerful bullish candle. Should keep this in mind. When we enter in this manner, it means that most likely we will continue to the upside at least for 1 or 2 candles. So let us do the candle to candle analysis. So the next candle is also a trending candle. When I say a trending candle, well, let me explain the price action to you so you could have some understanding of what I'm talking about. So there are 2 kinds of candles. So this is the range of the candle, and this is again the range of the candle. Yes. Suppose they are some candles of average range. So a trending candle is called a candle when the price is trending from open to close. So we had some trend, we had some movement, we had some progression. It is a trending candle. So it means we have a trend. And a range candle is something when we didn't trend anyway. So we started here, we went lower, then we went higher, and then we ended here. So actually we had no trend. The trend from open to close is this. What is this sideways trend? It is a consolidation, it is a range, it is something that is not very good. Okay, when we have a trending candle, the anticipation is that the next candle will be trending as well, because the trend is a tendency for price to move in one direction. Yes. So when you see a trending candle, then next candle most likely will be a trending candle. If it is next candle is a trend, then next candle will most likely be a trend candle. But if it is not a trend candle, if it is a range candle, this means that we started the consolidation. And there are 2 ways how the consolidations resolve. You know that. I suppose you should know this. This is a trending candle, trending candle, trending candle, and then after this trend we're stuck in the consolidation. So there are 2 ways how this consolidation is resolved. We either break to the upside and the trend continues, or we break to the downside and the trend reverses. That's it. There are only 2 situations. So what happened here? We have trend to the upside, we have trend to the upside. You can see trend to the upside. Then we're stuck in some range. This is the range. And then this range was broken to the upside because the high of that candle is higher than that candle. So actually, although this is a range candle as well, it broke the high of the previous range. So we have this upside momentum on this candle. The fact that this candle has a powerful bearish close tells nothing, because it is, well, it is a range. We are in a range. It tells not very much. It is telling not. I wouldn't enter this. I wouldn't enter here. Okay, the next candle started trending to the upside slowly, very small trend to the upside. Basically all these candles, I would unite these candles into this range. They are all three are range candles. Well, let me draw this. The two of them are range candles, like this. So we had a kind of channel, and then we broken that to the downside, potential false breakout. Then we broken that to the upside, and then we closed inside of that range. So let us see how it resolves itself if we have a trending candle to the downside. So if we have price traveling from open to close, and here we can execute that. It will be a very good decision, or a very good entry. But when you have it this way, it is a stabilization. Yes, after a trending candle, we have kind of stabilization. We stuck in some range, and this one is, well, I dislike this candle because it's broken the range to the upside. Simply because of that. If we had a bearish one broken to the downside with no controversy, it only moves to the downside, well, then it would be much better. Maybe if it looked like this dodgy, broken to the upside and then to the downside. Okay, simply waiting for this candle to close. If it closes in a similar way it is right now, then it would be a good entry for this candle. Just treat the candles being the range candle and trend candle. So we had trend to the upside. This is a trend to the upside. Although the body is small, it was trend to the upside. The range was broken to the upside. And right now we have a possibility to reverse, the probability to reverse. So if the candle closes the same manner we have right now, it would be a good entry. Well, hope I explained this good. Explained this well. What is this? Okay, going to Euro New Zealand. 1 hour, 4 hour, nothing is there. Canada Yen, 1 hour, 4 hour, nothing is here. Aussie Canadian, 1 hour, 4 hour, nothing is there. And Aussie New Zealand, this one is the yesterday's trade that I took yesterday. So what was my execution? First of all, it completed here on this candle, yes, and we have 78 candles. It is okay. Then another confirmation for this 34.5 and 39.6. Well, it says that you can go to 30 minutes to execute this, but for me it is enough to execute it here because it is enough candles here. 37 is it is enough. It is more than 50 and less than 100. Okay, so let me zoom it in and let me go this way and disable this. Okay, what is the execution here? Very simple. I used, as far as I remember, I used the inside bar penetration or something of this kind. So let me show it to you. You see this candle, bearish trending candle, then we had some range. It happens, the range typically happens just before the break. If you watch my previous videos, once again, let me show it to you. So this is a potential resistance. It doesn't matter what how you identify this resistance, maybe because it was previously tested, yes, like this, and now it is a potential resistance, or maybe it is a simple retracement. So the movement was this, and it is simple retracement of 618, 786 or whatever. So it doesn't matter. So when you see the price is coming close to this retracement, and then you see it moving this way, so odds are in the favor that you will have it this way. This is accumulating some power before the break. This is what it means. Very, very seldom you have it broken to the downside and you continue lower. In majority of cases, you can have a break to the downside and then break it to the upside. So it is a false breakout to accumulate large position. Institutional traders accumulating those large positions. They buy it, pushing to the upside, and the sellers sell in the face to the institutionals. Then institutionals buy, and then other sellers say. For an institution, it is impossible to initiate a position of, let's say, 5,000 lots. How can you execute this position at market? Somewhere here, if you buy the first 500 lots here, the price already will move here, so the second 500 lots will be executed at much worse price. So what institutionals do, they look at the areas where potential buyers or sellers may come together, and it is a good way to buy at support for them, because they always have liquidity there. They always have somebody who is going to sell something for them. So if I'm going to buy it through, I will be looking at some resistance, because my position is very large, and I'm almost guaranteed to execute it somewhere within this area and not here. I will be getting much better price rather than this. Well, I hope you understand this. If no, go to learn some basics of how it moves. Well, let's continue. So we had this range. After this trending bar, we had this range, and if it is broken to the upside, it means that we have a continuation. Although the range was broken by another range candle like this, so it signals continuation. You can see that this candle is looking like a pin bar, but because it's broken the range candle, the break of the range typically means a continuation of the broken side on that side of that broken. The high was broken to the upside, that we have a range. And after that range candle to the upside, I'd say it was an exhaustion candle, the last thrust to the upside. We had this trending day to the downside. So we trended to the upside very vigorously, and then immediately after that we've been punched to the downside. So bears were trading to the downside, but the candle stays within this limits, within the previous. So although we have some bearish power because we have a bearish trend candle, we're still kind of indecision, because we didn't violate the law of this candle. That's why it is advisable for you not to enter when this candle closes, but to wait until the next candle breaks the law of that and it supports the initial movement. If this candle breaks the high of that, then the setup is invalidated and odds are in the favor that we will move higher. So simply do not enter this. At least for a few candles we will move higher. Okay, this time we broke into the downside, and it was a very nice execution candle. What you need to do after that, you can enter exactly at market. You can place a stop limit order. I mean, you place a stop pending order a few ticks below this low, something like this, or you can wait until this candle closes and then wait for a retracement to get a better price. So after this signal appeared, those of you who were waiting to retest of the previous highs were very lucky, and that was a double bottom. That was a very, very nice decision. By the way, if you don't know how those double bottoms appear, they are very, very simple. After looking at this large candle, yes, some stupid guys think, oh, you see, price is moving so nice to the upside, let me buy it. And they buy. And after they bought, typically they buy very large amounts of maybe going all in, the price starting to move to the downside. So they feel emotional pain, and it moves to the downside lower and lower and lower. And somewhere here, when they have enormous loss on their account and they still don't hit the stop loss, they cannot close that amount because they should admit that they were wrong, that they were stupid to buy it here. Nobody would admit that. They make a decision, you know what, when price comes back to my entry, I will rather exit break even, because it doesn't work. And so what they do when price comes back to entry, they sell their positions. So if you remember, they were long here, they bought, and in order to get out of this position, they sell it, and they are happy that they exited break even. So they very, very happy, and it results in this movement. It results in this double tops, double bottoms. Okay, as for this double top, the neckline of this was not breaking by this candle, but the next candle supports that. Although the range of this candle was smaller than this trend, the previous trend, it is still a trending candle. We had some trend to the downside because we trended from here to here, and the next candle wasn't obvious. So right now it is an outside bar. If compared to this previous, yes, it is an outside bar, and you should keep pay close attention to these bars. This one is an outside, and this one is an inside bar. So the inside bar is already penetrated to the upside. It means that in a few sequence of candles, maybe 2 or 3, we can have some upside momentum. And even if we break this high, we can also have some upside momentum. It typically happens with double bottoms when they are broken to the downside. When a neckline is broken to the downside, we typically have some retracement, and here, after that retracement, retest of broken support, it should now become resistance. There is a strategy that is called 2618. It means the 20 means 2 double top, and 618 means the 618 retracement. So typically price goes to this 618 after the break, and then it goes lower. Okay, you see, you should know about the market psychology. You should know about the price action a lot to trade whatever pattern. It doesn't matter what type of pattern you trade. It's not only for this advanced patterns formations. You should have some background. You should have some understanding of how it works. Well, the price is very close to 382, and we all hope that it hits that level. After that, move your stop losses to break even to where you entered. If you entered somewhere here, then stop loss should be moved there. And in case price is reversing and hits that, you have the 0 instead of loss. Yes, and at this point of 382, close half of your position exactly as it is written with conservative rules. Target 1, target 2, new levels. Target 1 is attained, half of the position should be closed, and stop loss of remaining half should be placed to break even to entry. Well, that's it For today, all pairs analyzed. One of them is running since yesterday, and the pound-dollar 4 hour is the one that I'm looking at for the next opportunity. It is this one, pound-dollar 4 hour. Completion is 32.45.6. So simply place alert here, and you will be notified when price hits that zone. You can either execute a limit order once it is completed, or you can wait for some price action to support your anticipations, and then execute it more conservative. Well guys, hope you like this video. So give me a thumbs up, share this video on social media, comment below. I'm very happy to read your comments. And don't forget to visit my website www.PriceAction.net. If you are interested, by the way, if you're interested in the software that I have created, you're welcome to go to the home page, and you will have those video explanations and demonstrations. So here and here, how exactly my software works, it is explained there, and you can see how it works here. It draws patterns in advance. Always very handy to do that analysis. So what I'm concentrated on, I'm not concentrated on, well, where is the pattern, I should draw the pattern this, I should draw the pattern here, there, and so on and so forth. What I concentrate on is the execution process. I'm concentrated on price action, I'm concentrated on trade management, and that's it. I'm not thinking about the patterns, because the patterns are drawn by the indicator, and it is giving me a very enormous advantage over other market participants who do it manually. Well, you will find the link in the description. Until then, good luck, good trading. Don't forget to click that subscribe button.